So last but certainly not least, I'm delighted to say we have Dr. Xiaolin Chen, Head of International at Crane Shares, and she's going to be speaking on the topic of ESG and whether this is the key to our performance in China. Over to you, Xiaolin. Great to have you on board.
Thank you very much, Tom, and good morning to all of you, and a very happy Thanksgiving holiday. I appreciate your time and the opportunity, also allowing us to introduce you who we are and what we do for our clients globally. My name is Xiaolin Chen. I'm the head of international at Crane Shares based in London. Today, I'd like to discuss a strategy that we see fit to clients' portfolio from a long-term perspective, a China ESG Leaders Fund. Let me start by telling you a bit about the firm. Crane Shares founder Jonathan Crane, who formed two co-beliefs during his experience living and building a successful business in China. These were the basis of us founding Crane Shares over 7 years ago. First, new China sectors such as domestic consumption, internet, e-commerce, and clean energy have become the new drivers of China's economic growth. This asset class, China, is still underallocated to global portfolio. Second, the opening of China's mainland equity and fixed income market will have a significant effect on clients' portfolio in the years to come as inclusion efforts continues. Our role at Crane Shares is to help our clients globally to access and benefit from such growth happening in the country and capitalize them in an investable vehicle. Crane Shares is majority owned by China International Capital Corporation, CICC, the largest investment bank in China, co-founded by Morgan Stanley in the mid-1990s. When discuss ESG investing, often it gets explained at a high level, but it's also important for investors to understand what exactly the behavior under each category that counts towards to the environmental, the social, the governance. So for example, this varies from a company that implements an initiative to improve energy efficiency, to offer benefits to employees by providing a training program, or to separate ownership and management and offer a diversified board members. All these initiatives are the key steps to integrate and establish a long-term sustainable business. Investors reward corporate that comply with these standards. In China, the government has also made ESG-related policies as their top priorities over the past decades. I wanted to share a famous saying about 125 years ago from a Chicago businessman, William Patrick Rand. He once said, "Smoke is the incense burning on the altars of industry. It is beautiful to me. It shows that men are changing the merely potential force of nature into articles of comfort for humanity." Not so long ago, such naive admiration of smoke as a sign of progress, prosperities, and power was not out of place in China. In fact, it is an unavoidable situation faced by many nations when their economy were rapidly industrializing. It took China about 20 plus or close to 30 years to become the world's second largest economy after the United States. These remarkable achievements come with a price. But the fortunate for China is it can learn from hindsight. In July 2008, the Ministry of Environmental Protection was founded and setting environmental protection at the highest level of Chinese government. We see a noticeable slowdown in output industry. And if you remember, during the 19th Party Congress that President Xi Jinping mentioned nature, green, environment in his Congress policy speech collectively 41 times, put this firmly on top of the agenda for policymakers. China is never short of setting ambitious targets over the past years, and they have proven to be highly capable of achieving the goals. We see investments in new energy source rising massively when the initiative of rationalize the core production implemented. China, in fact, is outpacing other world leaders in growth of electrical power capacity from renewable technology, as you can see on this page. The status report from 2014 to 2019 shows that China is growing on multiple rates compared to the United States, European Union, and Japan. China clearly is emerging as the renewable energy powerhouse of the world and has top-ranked power capacity in almost all major renewable energies today. What is interesting to note is, though, China's per capita capacity is still way below when you compare to its peers relatively, indicating there's still room for growth for China. In 1980s, if you remember, China's rural reform remarkably increased the agriculture labor productivity and freed almost 1/3 of the labor force. Since 1995, more than 20 million people have migrated from rural to urban area each year. Today, China's urban population is over 810 million people. That's almost double the European Union's entire population at an urbanization rate of close to 60% in China today. Now, with more people living in cities, we often drive a result from there. They got access to better education, and as a result from their graduation, they get a better job, earning a higher income relatively. And they also will demand for a better lifestyle by consuming good quality and sustainable products, working for corporate that put emphasis on social responsibility, as well as offering an internationalized corporate and government framework. Not only employees have such preferences, corporate themselves also have increased the compliance with the ESG practice as domestic capital market is opening to international investors since 2018. Today, the international investors have access to China onshore equity market and have a better understanding of the underlying companies that are included in the MSCI Inclusion Index. Market estimate over $100 billion have already in the A-shares market. A-shares market is China onshore equity market as a result of the last 2 years inclusion effort. Yet the expectation from the market is another $220 billion are still to be invested into the onshore equity market. Obviously, from the government setting the ESG as their national goal to the underlying drive from the domestic force to improve or promoting the ESG practice more broadly. And now the international investors are encouraging the corporate to strengthen their ESG efforts in exchange for more capitals to their business. We really firmly believe Chinese companies that score higher ranking in the ESG offer a great long-term investment opportunities. Here are the fundamentals principles when we were thinking of constructing a China ESG fund. The key here is, one, to capture the companies that are driving force in achieve and surpass the ESG goals, and second, to find the leaders that are continuously meeting and beating the market expectations in setting high standards for its peers. It is important to credit the efforts not only to the private firm. When I meant private firm, it's not privately owned. In China, there's two standards of how you classify in organization. If it's owned by the state or owned by public or private, they all called private firms. We want to credit the firms that are either private owned or also the ones that are state and owned enterprise. They call them SOEs. As we believe the reforms continue to push forward, the SOEs are even stricter in deliver the ESG requirements as it set out in the government's policies. We value the companies from China, regardless where they are listed, and then the broad sectors to represent the entire economy and include the companies deliver the great achievements in all ESG factors. Given the selective nature of capturing the leaders, it is understandable that you will see relatively higher volatility in short terms, but the outperformance outweighs the volatility as it offers a better information ratio. The resulting impact on returns generated from ESG criteria can vary significantly between markets. This dispersion is particularly evident when comparing the difference between a standard and ESG index returns, for example, in the US and in China. MSCI USA ESG index has returned somewhere around 130% since 2013 up until last quarter end, but that still underperformed the broader MSCI USA index. The underperformance may be tolerable for investors who accept trading off for performance for a positive social benefits of ESG, but in China, a different story is unfolding. Since the inception of the ESG index in 2013, again through last quarter Q3 2020, the MSCI China ESG Leader Index returned over 170%. That outperformed the MSCI China Index by 69%. ESG investing, you can arguably say, is inherited future-looking, and there's perhaps no place more focused on planning for the future than China. Every 5 years, the nation issue its 5-year plan, where the government will outline its vision for the future. For instance, capping the carbon emissions, expanding green energy output, and developing high-tech sectors are all fundamentals to China long-term plans. These are the top 10 names in the KESG fund. I think many of the names on this page need little introduction. Tencent is up almost 50% this year, has over 8 billion active users on their WeChat app, and offers a one-stop for all app, include finance, payments, wealth management, that gets selected to this fund as their initiative of using energy-saving measures in their offices in Beijing, including optimized air conditioning systems and building management systems. Alibaba, up 44% year-to-date, world's largest e-commerce platform, hosts millions of merchants and accounted for over 80% of China's online sales, get selected to this fund as their efforts by using renewable energy and water efficiency systems to make their data center more environmental friendly. Looking specifically at Chinese companies that achieve high scores for their carbon emissions and product carbon footprint reductions within MSCI environmental pillar, China's electric vehicles, the EV manufacturers, are notable standouts. NIO on this page, you can see, known as the Tesla of China, is up 580%, and BYD is up 275% year to date. In 2019, China accounted for nearly 50% of all the electrical vehicles sold worldwide. By 2025, the EVs are projected to account for 25% of China's new cars sales. Clearly, the past performance is no guarantee of future results, but markets is clearly rewarding these leaders with their achieved ESG scores. It is crucial that we work with the most reputable index provider that have approved capabilities in monitor, assessing, evaluating the companies to capitalize the investment opportunities. MSCI has over 40 years experience in conducting ESG research works. When we were looking and assessing who we should work with to capture that Chinese companies in the leader space, wrap them in the index to represent for the ETF to track, MSCI come to our mind, and we felt it's hard for any other index provider to match the record that MSCI has delivered. So we all know the accessibility to onshore market has improved dramatically. Individual investors still have some challenges to access some of the stocks in China, because some of them are predominantly listed in Hong Kong, Shanghai, or some are in Shenzhen Stock Exchange. Our funds obviously can act as an access vehicles for all these stocks. The KESG fund tracks the MSCI China ESG Leaders 1040 Index that satisfies the usage rules. The fund is aimed to provide exposures to companies with higher ESG ratings relatively to their peers, consist of large and mid-cap companies in China. ESG scoring may, have started as a tool designed for investors who want to have a positive impact or mitigate climate change's risk on their portfolio. However, beyond aligning investors' value, these ratings have proved to serve, at least in China, as an invaluable, filter for identifying high-quality stocks. Over the years of us engaging investment discussions with our clients, we have seen increasing interest in gaining market insights on China. We really believe investors now, more than ever, need to understand the world's second largest economy. We obviously at CraneShares, my colleagues and I endeavor to earn your trust by providing a balanced perspective on China's capital market. We are available here. We're based in Europe, so please don't hesitate to reach out to us in any case you have any questions on China or ESG related topics. I know I have run it quite quickly, so I would be very happy to take any questions. If there's any, Tom, I want to pass back the mic to you at this time.
Perfect. Yeah, no, absolutely. We've had a couple of questions. I thought we'd just bring on our poll first, if that's ready. So we asked, are ESG and emerging markets compatible? Pretty resounding yes. Xiaolin, is it arguable that you can have an even bigger ESG impact in EM due to the kind of wide disparity between company scores?
Tom, just say it one more time. You can have what?
Can you arguably have an even bigger impact, a bigger ESG impact in emerging markets due to the kind of wide disparity between company scores, whereas in developed market it's sort of few and far between?
I think in being in the emerging market, you always have a way to catch up, right? In many ways, in all these three factors of E and S and the G, right? For instance, the governance, some of the companies in China, in EM or actually in Russia, for instance, they are still very concentrated or controlled by a family, by a state, and these diversification effort of broadening the board member, for instance, or the ownership is still ongoing, but I think that's more matured in the developed market or in US or in Europe. Those efforts being put in place is definitely more welcomed by the market of local investors and international investors. So I think judging by the room to improvement, definitely you'll see more improvement, enhancements and changes in those factors in EM stocks.
One question we've had from the audience is, I appreciate China's strength on the E score, but can investors be comfortable with S and G given the question marks over the government's influence over companies and its human rights abuses, etc.?
That's a very good question. I think, often we get asked by these questions, right? Sometimes people say, ESG China, what are you talking about, right? So from that sense to today, people was like, I see what President Xi Jinping said, in September, what's the goal of delivering a carbon neutral in 2060, and admitting that 2030 will peak for the carbon emissions, all these things. I think on all the other factors, you got to look at the domestic, for instance, the workforce, right? You and I, young, like a lot of, I was born in China, worked overseas, but when I go back and when I see my, my classmates, my peers, that they also had a similar experience and they went back to China to work. All these will drive for better S and the better G for the corporate to deliver. People have a choice to choose which corporate they work in or work for. And I think, it got to be driven from the top down and bottom up. People who work in the company say, I see this happening elsewhere. We need to meet that. So I think a lot of the Chinese domestic company don't underestimate them. They have a very young age of the senior management level, but they have seen what has been done and done before. So they would drive that to happen. But I think the government is never against of or try to interfere of any companies improving the S and the governance. They want that to happen. Obviously, for some of the state-owned names, may have to do in an orderly way, right? That make the government feel comfortable. For instance, the CCB, the China Construction Bank, is in our fund. I got a client asking me, what the hell, a construction bank can be in the ESG fund, right? It's a construction bank. You're absolutely right. The construction bank was the major funding source by the government, because they owned by the government, majority owned by the government. Okay, before 1990s, it's wholly owned by the Chinese government. But they want IPO, and then now they have public listed companies. The company was providing the source for building a bridge, building, some, the infrastructure projects you could imagine. But now what they do is they geared differently to support the government policy. For instance, they supporting the One Belt, One Road projects. Second, all the green projects that China is trying to build and initiate, they are providing the fundings, they're helping issuing the funds, the bonds, and all the things. So you got to credit the firms that had the history, I got you, but now it's moving towards to comply and deliver high standards of ESG.
Just on SOEs, we've had a lot of discussion about engagement over the past 2 days, especially from an issuer perspective. Yeah. When you invest in SOEs, you don't quite have that same sort of engagement level that you would with other companies. What would you kind of say to that, and why you have SOEs in your ESG ETF?
We do. CCB is one of the SOE. You argue they are SOE, but today, I think in 1990s is more of a clear cut who are the SOEs. So state-owned enterprise, right? That means all controlled by the government. And then in 1990s, when Shanghai Stock Exchange, Shenzhen Stock Exchange become available, the government encouraged companies to go IPO, right? You can do the IPO in Hong Kong, you can do the IPOs in Shanghai. That's back in 1990s. And back then, the CCBs included, all these companies of banks, steel companies, commodity companies, healthcare companies. They all kind of like went publicly in the orderly way. You could argue they are majority owned by the government. You could argue that because they still have high ownership, but they do have the other half owned by public. So there's no play of a 100% owned by the government nowadays. Not those big companies in the key sectors of finance and all these things. I think eventually the SOE would have to release more shares to the public. The government will take a backstage. And then I think most importantly, it's good to see in the next year what the 5-year plan would look like, right? ESG definitely is the hot topic. Market expect a lot of detailed steps and progress will be made and announced in the government's policy. It usually happens earlier of the year by March. So those are expected. And second one is the reform of the capital market, reform of all these SOEs continuously, right? So those will be interesting to see how that will get delivered. And my expectation for that is going to be continue to hit the market and give the international investors the confidence. And we know the inclusion for the equity happened in 2018, fixed income happened in 2019. All these means international investors coming into the onshore market, still with a small percentage of ownership, 2 to 3%, that need to meet with international standard. I never say it will meet USA tomorrow, but US is at 30%. So that gap need to be closed. And the inclusion for the equity effort is almost paused this year. We know the reasons, right? But that will resume because the inclusion only done 20%, there's still 80% to go. So all I'm saying is there is this outside of the intention and effort and willingness for onshore to do more to deliver. And there's intention from onshore, from the government policymaker, from the underlying company to meet with the international standard. I think given China is so large in the economy, give a bit of patience, it will come and meet the international standard and deliver what you and I are very familiar with as systems or a framework that we feel comfortable in our portfolio.
Yeah, that's really interesting. That leads on nicely from another question we had from the audience, which was just around the recent inclusions. And do you think that makes it the perfect time for the country to push its ESG standards with more international investors coming in?
I think the short answer is yes. Why I say that is this was last year, 2019, I feel a long time ago. I was visiting Shanghai with a group of institutional investors visiting China. We were at Shanghai Stock Exchange, and the head of Shanghai Stock Exchange came to speak to us. And then they present during the PowerPoint. I saw one page, I was shocked with the number. And then I asked the lady sitting next to me from Shanghai Stock Exchange, is the number correct? And she said, yes. The number shows 60% of the companies listed in Shanghai Stock Exchange. There's 3,005, let's say give or take 3,000 plus companies listed in Shanghai that are voluntarily disclose their ESG standard. voluntarily. I would thought 20%. I really would thought a person who follows China market that closely would thought 20, 25 or 1/3, but then at 60. That's surprising to me, right? It's voluntarily. There's no hard rules that you have to do it. It just shows that, the inclusion is happening. Every company wants their name to get included in the inclusion, right? Obviously at that stage, it's large and mid cap and it will roll to other small cap. But you just shows the effort being done by the local company that are saying, I got to be ready because I know what international investor will look at my company, at what level. I got to do that now. Then, you get included and you don't have ESG. So they are getting ready. This is 2019. I think the number will be higher. I think the inclusion of welcoming the names to broad international indices is definitely a positive step forward. And also all the headline news will also help the Chinese government to do more of the reform. You see the tech board announced, in China. It's almost like the NASDAQ 49 years ago, right? And new tech board. So you can see all these efforts they are trying to do, saying, I hear you, I will do that, I will deliver. These are the steps I've been doing. I think with China, it's really just a bit of a patience needed, obviously. And second is for them to learn quickly what international investors will reward you, and then will come in as a capital. A lot of the companies are looking for capitals from international standards. They want their companies to become the international recognized names in clients' portfolio. So I think more positive to come for onshore equity for sure, and fixed income obviously to meet the ESG standard.
Yeah, that's really good. And question I had was just around performance. It slightly leads on from the previous panel's discussion. Is when you invest sustainably, does performance matter?
In the past, I think about a few years ago, you probably say, I really want the positive impact from these factors in my portfolio. That's the key for me to invest in the ESG. I think my number may be a bit dated for short weeks, but I think over 1 year rolling, we probably have $20-30 billion already of ESG AUM. Out of that, globally, 60-70% is in Europe, right?
Yeah.
We always are the leaders of driving ESG solutions available in the market. In the past, you argue that it's really just for impact, for what I want to get access and what I want to reward all my clients' preferences. Today, you have two things. One, you have more choices to decide what you want to use in your portfolio, right? In the past, people say, I just need an active fund, right? Yesterday, I got asked by a client saying, hey, you are an ETF issuer, tell me, can you deliver the same results with mutual funds? I said, well, 5 years ago, I would say no, but today the ETF world has a lot of choices and more choices you would think of. Certain sectors play, certain factors play, certain countries play. I mean, all these in ESG, right? Client can be very distinguishedly pick what vehicles they want to be in their portfolios, express certain view or preferences in their portfolios in the ESG manner. Plus, the underlying investors, globally speaking, with or without ESG mandate, are rewarding the corporates with the performance, right? We give a couple of names in China, ESG leaders. I know the broader MSCI ESG did not outperform the broad market, but it was 10% behind. But again, we're so selective in nature that actually, in many ways, it's tolerable. But there are certain markets, like you were saying, Tom, at the beginning, EM, Asia, China, are delivering even outstanding results with ESG factor and filter for the stock. So I do think today you don't need to compromise your preferences in ESG with performance anymore.
It's a good note to finish on. Just like to say a massive thank you to Alan for jumping on. That was absolutely fantastic.
It was always our pleasure to be here with you, Tom. Thank you,
Xiaolin. If you guys if any of the audience members have any questions for Xiaolin, then do visit the expo area where some of the Crane Shares team will be. Just before we go, I'd just like to show you one thing from us. I've mentioned it a couple of times already. It's our Beyond Beta. If you could just share my screen, that'd be great. So if you go to publications on our website and then click and then fill in your details, you'll land on this page. And our latest Beyond Beta has been focusing on ESG, and we've got a lot of really interesting topics. I've done a piece on ESG and gold following a lot of ETF investors investing in gold in some of their ESG products. iShares are also looking around the myths around indexing and ESG, and also Stephen Golden from Parala Capital has done a really interesting piece on ESG and SRI factor sensitivities over the business cycle. So if you are an ESG investor, then I do encourage you to have a read of that, get that downloaded. Otherwise, apart from that, I'd just like to say a massive thank you for jumping on. It's been a really good event, and yes, and a big thank you to our sponsor, headline sponsor Amundi, our sponsors HSBC, GAM and Franklin Templeton, Crane Shares and Ultimus, our academic partner, EdHet Risk Institute, and our supporter Jobs and ETFs. If you've got any questions for them, some of them will be in the expo area still, but otherwise have a great rest of the day, and thanks a lot for tuning in.